Good morning, everybody. Hope you guys are doing well on this beautiful Wednesday morning. My name's Troy McNeil. With me is my dear friend and mentor and co-host Dan Sheridan. Dan, how you doing?
Doing well. Good morning, everybody. Hope you're well. I got a little bit of the morning voice here. Trying to wake up here. Good to see everybody.
Got the
And
morning.
for anybody from California, we give you massive credit. Anybody from California that's here at 5:45 in the morning, you're a better man than we are.
Yeah. Shout out to the West
Shout
Coast.
out to the Californians.
Yeah, that's right. Dan, it's been an eventful 24 hours in the market. Before we jump to that, we're going to go through a couple things real quick. Yeah, First off, I have the good news is I have a truck that has 220,000 miles on it. The bad news is that truck is 300 yards from my house. The first time ever. We've reached the age. It's a grand old age. We've reached the age where it just is having trouble. So I told Dan I might have to scoot here in a second to get. I'm waiting on the tow truck. So, but it's right here. I can see it out my window. We're all good. Anyway, let's do the rundown this morning. So first off, the most important thing on the rundown, we got to talk about 50,000. Not the Dow 50,000. Not anything like that. Boring like that. We of course are talking about LeBron James scoring 50,000 combined points, playoffs, and regular season last night. Dan, I mean, listen, I know we don't see eye to eye on LeBron, but
beautiful picture.
That's a beautiful picture. Multiple eras, the king. You would agree, the guy just puts his boots on. He just goes to work every day.
He does. I would love to get a little conspiracy theory here. And please, no one from Los Angeles, please don't send me anything. Two comments on this. A, wouldn't he look better if you kind of photoshopped a beautiful crown on his head? Number one. But number two, I would like, it's probably not true, but I would like to start the conspiracy theory with LeBron that how is this guy at 40 years old playing so well? Steroids. Right? You got to bring in, you got to throw. I heard somebody, obviously on the internet, you hear so many different things, and somebody threw that out there. And, coming from Chicago, Sammy Sosa, he's aging and he's, like people should age. You get a little flabbier and everything. And all of a sudden, he's a rock and everything has changed. And I'm like, whoa, I want that as I get older. And so LeBron, I just think if I can float that out there as a conspiracy theory, it's steroids. I don't know. Why not?
I hear what you're saying. I'll take a different route. I'll say this is what's possible when you're great and you don't, decay your body through staying up all night gambling. As the man in Chicago was known to do. So by 40, he was a wreck. Just so
absolutely, he does. And there's that mystique about him. Sleeps in an oxygen tent or whatever. That adds to the drama, right? And spends millions on his body and all that. So, anyways, I'll stick with the.
You'll stay with the conspiracy theory.
I'll stay with the steroids.
I understand. All right. Well, we'll move on then. So, second, Dan, are tariffs even real? Do they even exist?
Yeah. What do you think on that? What's your thought on that?
So I don't know. We'll talk about it in a minute. The market certainly doesn't know what to believe at this point. That's the one thing I know about it is, the market's kind of reacting this morning like it doesn't believe this type of stuff. And so I remember the first term, a lot of was it Larry Kudlow would come out and kind of throw some stuff out every morning.
Yeah.
And not saying they're liars or anything like that. I think they have a policy of seeing what sticks. So they're throwing a bunch of stuff out right now and seeing what sticks. But who knows? Who knows? What about you?
I think you hit it 100%. I think it's just, it's one of those guys like at a party who comes in and he stirs the pot, gets people all jacked up. And again, I know historically we've done tariffs before and I don't have the historical expertise or anywhere near. My expertise is still trying to figure out what the word tariff means, Troy. But I look at it this way: it's just he's trying to, with these people, I look at this as a very short term, trying to get a better deal for our country. At least I think that's what he's looking at. Some kind of better deal, because he's already saying, just come some way. Okay, I throw this out. Let's end this, right? I mean, China is like, we'll fight you to the death on this thing. You know, we'll tariff till the guy. But he doesn't want, he just, it wouldn't surprise me if in 3 days, him and Xing, what's his name? Or the Chinese guy, what's his name?
Xi Jinping.
Xi Jinping. You said that very well. I am very impressed.
I appreciate it.
Yeah, but it wouldn't surprise me if they're having lunch, right? I mean, Zelensky, they're almost doing World Wrestling Federation. I wouldn't be surprised if he didn't jump on him and wrestle him, when him and Zelensky were going at it. Well, in 2 days, he's coming to the White House, right? Yeah. And so now they'll have lunch, and Trump will say, you know what, he's my best friend, and we're going to Mar-a-Lago together and everything like that, and it'll be a party time. But I think the tariff is just a little bit of it. He's already said, right, that we'll try to get, if we can go halfway. I just love the quote today, right? They interviewed him. A little disturbance in the market from tariffs is okay. I love that, because I think it is a short-term thing. I mean, and look at the candles in the market. I think the candles are saying, A, what's a tariff? What's going on here? Is it going to be, I could be wrong, but I don't think it's going to be a long-term, because you're telling me Trump is not sensitive to the markets? Oh, good grief. He's a business guy. So I don't think he's going to let it. He probably looks at the ticks more than you and I do. Yeah. Right. And I think, right. So I think he's all over it. And I think it's just, hey, he's trying to get some engagement. The only way I think that could go the other way is like Mexico and they could get just tired and say, he's a big, he's being a blowhard. Yeah. And we're fine. But I think it'll work. I think he can, he's just trying to get some engagement here, and it's been the status quo for a while. So I don't think it's going to continue. And again, one other thing, I think it's just like the tariff, we'll wait till we're going to get to the market segment in a second. I'll hold that thought on the tariff in the markets. But I think it's an interesting thing, and we should get a microphone and go on the street, Troy, and see how many people can explain to me what tariff is, right? Oh yeah, and 100%. Yeah, and I have to look at Wikipedia before I actually do the interview.
Yeah. Well, the funny thing is, it's not like it really is confusing, because I see a lot of people who, even Republicans, who say it's a tax, on businesses, or it's a tax on the some point in that chain, starting with the country, ending with the consumer. It's a tax on someone. It's just a question of who's paying that, and that's the great mystery of all of it.
And it's just the trying to get a negotiation going, trying to get a little better deal, and just the other countries, it's just how much they're willing to play along with this. But I think, we subsidize a lot of them, right? A lot of we give them a lot of money. So I think, I'd be surprised if in the next, I'm not saying anything can happen, just my gut, in the next 4 or 5 days, things settle dramatically, right?
Yeah,
it's and I think the candles, as much as day traders want these candles to go on for a century, I think they're going to subside a bit.
No, I agree completely. Yeah. Which brings us to our final point. Markets are crazy. Yeah. I'm going to show my screen real quick, Dan. We'll talk about this another week, but I think it's interesting. This is a market profile chart.
Yeah.
I'm sure you've seen this before.
Oh, yeah.
But this is a pretty cool visualization to me. The main thing I want you to look at is this M, these letters M. Those are from yesterday, from 3:30 to 4. So the last 30 minutes of the day trading.
Wow.
And, we 58.61 down to 57.68. So, what, an 80-point drop? Yeah. A really fast 80-point drop. Well, the thing that's got me, if you're long going into this morning, the thing you can't be feeling good about are two things that I think are noteworthy. One, the overnight action never got up to yesterday's high. So here's that line. Here's L period is 3 to 3:30 period. We got up to 58.76 in the ES. the overnight action could never rally that high. Two, where it looks, who knows what's going to happen, but it looks like we're going to be starting at the bottom of the overnight range, where we were up 40 or 50, maybe 40 at some point. We're closing well into yesterday's, where we were kind of not at the low of the days, but the normal time. You see all these letters right here, this green. Yeah. That's the majority of time spent yesterday.
So most of the time was spent kind of where we are now in the E-minis.
Exactly.
So this is kind of where we should be, at least from a volume.
And that's the thing that, there's two ways to look at it. If you're bearish, you really want to see it take out yesterday's low with some force, because we're going to keep getting short cover rallying if it doesn't show some momentum. But then two, if you're bullish, you really wanted to see like some massive short cover. You wanted to see it kind of rally back into the ranges of the days before, and so we're not there yet. We're still kind of just waiting and seeing. And that just shows me that there's no confidence in the market right now. Everyone's just kind of waiting.
No, that's a great point. And it's kind of, but in a way, it's kind of quieting down, right? You're saying, it's just saying where, we're running around like a chicken with its head cut off. Where are we going? What are we? And again, I think, don't you agree? Let's take before this, if you maybe make it the last 2 weeks before the tariff, we were at highs in the market, or the E-minis, on Feb 19th. That's not 100 years ago, right? At 61.66. And so I think because we were at, all-time highs, we're saying, was the tariff responsible for the market backing off? Troy, how long has it been since anybody is saying it'll be healthy? The market, even people who are long, are saying we need the market to back off 5-6%. Right? Yeah, this has been a short-term catalyst to do it, but because of the velocity of it, people get nervous always on the downside because you go down faster than you go up.
Yeah.
But this is just a catalyst. To me, the bigger things are real data numbers next week. Next week, Wednesday and Thursday, you have the CPI on Wednesday and the PPI on Thursday. Those are data numbers the Fed looks at and stuff. Not that the tariff is something to poo-poo, but you know what? If we didn't have the tariff, we should be down. We should have a period where we go down 5, 6, 7%. And that's all we did. We didn't do a correction. We touched near the 200-day moving average in the Jan 13 lows, right? But it's health, that's not the reason, right? If we didn't have the tariffs, we would have still gone down.
No, I agree completely. And last point on that. I think it's really hard to trade this market right now because you have these huge candles, you have vol elevated, but vol really, it can't sustain, sitting this. I don't know where we're going to open at VIX this morning. But it really can't sustain. It can sustain. Dan made this point last night. I was talking to him. I thought it was a great point, Dan. Like VIX can sustain a 12, 13 VIX for a month at a time. In a low vol environment, it's really hard for VIX to stay at 25.
Well, and if you look at a price chart of VIX, over the last year or two, it really doesn't stay up that long, right? And the only thing in this case, if we were to really, but because again, when we hit the lows, 57.44 in the E-minis, we didn't explode to what is the highest the VIX got yesterday, Troy? Maybe 26, 25?
I think it almost touched 26. I could be wrong, but pretty close to that.
So that's why I was looking, not to segue into strategies here, but as I was talking to Troy yesterday, he had he was interesting taking that concept wherever it is. If you think for a cheap shot with a little bit of caffeine in it, you are looking at, what's the name of that vehicle? The UV, the VIX on steroids. What's that one? The UVXY.
Oh, UVXY. So basically, real quick, UVXY is it's ultra VIX short term ETF. I don't remember if it's the double or they used to have like triple inverse and things like that, and then 2018 they got destroyed. But UVXY is basically the vol of vol ETF.
Yeah.
And so, and I was telling Dan yesterday, I mean, I took a short position in UVXY just because I think that we can't really sustain this unless we have a meaningful move down. That's, options involve risks. I'm not a financial advisor. Just a position I have on,
Yeah, and you bought a basically a defined risk put vertical debit spread. Is that correct?
Yeah. So basically the 21 and a half strike and the 19 and a half strike. Just it was expiring Friday. I mean, just.
And what expiration was that?
This Friday.
Oh, this Friday.
Yeah.
But you paid $2, right?
It was a little less than that. I don't remember what I paid here. No, because it was farther out from the money. I didn't buy at the money. I think I got it for 42 cents.
Yeah. Okay. But you bought something out of the money, defined risk.
Yeah.
But the idea is if we drop 3 points in the VIX or something, you're getting more because it's more of a leveraged product.
Yeah.
You're making a little more. And I think the reason I bring that up, Troy, is just because I think, when you're looking at these big ranges, you think, wow, somebody's just cleaning up, right?
Oh, yeah.
And they're making a lot of money. And I think if people, when you look at trades, take your time. If you don't find anything, that's fine. But in this volatile environment right now, we're not range bound. But if you could look at what trades would I be comfortable in? And when you start with a defined risk trade like Troy just did, just basically a vertical debit spread, right? Which you could apply. And I think a vertical spread, whether it be a debit spread or in the puts, if you think something's going down, or a vertical debit spread in the calls, defined risk.
Yeah.
And it can do pretty well. It's a cheap shots. And I was going to talk about that in a second. Just what are the cheapest shots you can do? If you're speculating a little bit, what are cheap shots? But again, I think the strategies needs to be, what are you comfortable with? What are you, whether it be, I have to say this word at least once a day, a RIC, right? The reverse iron condor, or a credit spread or a calendar. In this environment, you know exactly where the problem, how you make your money, what's the problem that you don't want to happen to this trade, and what are you going to do if it goes against you? And you have, in this environment, have to have a plan, right? And know when you're going to get out, right?
Yeah.
But I think that's, anyways, go ahead.
No, I think that's spot on, Dan. And what I'm going to do, I want you to just continue on with that, because you've been in these situations longer than I have, obviously, and you've taught a lot more people than I have, obviously. So if you're all right, do you mind putting toss on and just kind of looking at some stuff you're going to do? And then I might go see if there's a tow truck in my yard.
I was just going to say, is this a lead into the tow guys here?
This is a lead into the tow truck show, the option to make a tow truck show. But but Dan, you've got the floor here, and I'll be right back.
I'll talk just a few thoughts, folks. We'll go from topic to topic, but one of the first topics is I want to talk about expected move a little bit. Troy said there was a question that came to the YouTube about expected move and how do you look at that? And I like the expected move. I mean, I look at, here is, if you look at SPX, and as her, I'll use it a couple different ways, but if you look at Friday is March 7th, and you can see here, you guys can see with my cursor, the expected move in SPX is about 120 points up or down. So what does that mean? If we're currently at 57.80, it says the expected move, one standard deviation, 68% probability. You're saying we should be between, on the upside, around 5,900, on the downside, 5,600, 68%. So that gives you an idea. And the other way I get it is, let's say I'm going to put on a 2-day trade or a 7-day trade or a 12-day trade. And just like, and I want to say, okay, what's this journey going to be like? What's this journey going to be like for this trade? Well, I look as an average. If I'm going to put on some type of trade, especially as a range bound or something, like an iron condor or a butterfly or a calendar, some type of calendar, on average, again, not that you can't hold it to expiration, but I'm generally going to be in it about 30% of the duration. So if it's a 9-day trade, the most I'll probably be in it 3 days to try to get 10 or 20%, 10 or 15% on it. So what's the journey going to be like for a 9-day trade? Well, if I'm going to be in it for 3 days, I'm looking at the expected move for 2 or 3 days. And then I can kind of project it. Okay, this is where it looks like it can go. Most of the time, if you watch from Friday to Friday, the expected move, it's pretty close, right? Either we're in the expected move a decent amount of the time. It depends on the period of time, but 60% or more, or whatever the number is. But even when we're outside the expected move, it doesn't go that far out. So I think the expected move has a lot of relevance. And the main reason is because it's based on implied volatilities in the market. When you figure the standard deviation, what's the variable when you figure that, whether it be for the March 7 expiration or March 10, the variable is, what are the options trading at? What are the real options, the real implied volatility trading at? So it's a pretty good number, right? Versus not that charts are bad, but they are historical numbers, right? So that's expected move. A couple things on strategies. What strategy would you be comfortable in the market right now? If you say, Dan, I'm not comfortable with anything, then you should do nothing. But a couple ideas, and I'm just going through a list real quick, Troy. I hit the expected move. Was he there? Was he
Yeah,
got
I'm
it?
here. I'm here.
Oh,
No,
okay.
but he promises I'm the next one. I'm gonna let everybody know when this happens.
Okay, but I think the thing is, when you think about overall, if you're doing a strategy, do you understand it? Like reverse iron condor, you talk about that strategy a lot, and in the options omega community, they're reverse iron condor monsters, right? They do them, and they're very good, very effective. And it wouldn't appear to, so reverse iron condor, folks, too. Sometimes it's easier. I would do examples of it in Think or Swim, but maybe it's just for now, just talk it.
You have Think or Swim on there, so if you wanted to do it, you have.
If I could bring, all right. So an example would be an iron. If we do a reverse iron condor, folks, just so we can talk about it. So let's just say you want to do a reverse iron condor to Friday's expiration, and they've been working very effective. You say, why have they been working very effective? Well, because the market's been moving. But if I look on here, folks, and I just go buy iron condor. So if you go here, let me just clear some of this stuff. So buy iron condor. What makes them, and there's many different flavors of doing these, but I'll just give you one quick one. So let's say you buy, we're at 57.80 is where we closed at in the SPX. In a reverse iron condor, instead of selling maybe the out of the monies or something like that, you'll buy them. So if we're at 57.80, let's just say we buy, let's buy the 58.10s or 58.20s, 40 points away. Let's say we buy the 58.20. So I'm buying a call 40 points away. And this is Friday expiration. I'm buying a put 40 points away. So 57.40, right? And then the options I'm selling maybe 30 points further away. So if I'm buying the 58.20, sell the 58.50. And if I'm buying the 57.40 put, sell the 57.10. This at least be an example of it. So let's just look at this trade. If you look at this trade, pretty delta neutral. The volatility risk, you see the vega is 26. That just means for all essential purposes, you don't really have volatility risk. But the name of the game is negative theta. If this doesn't move, you are toast, my friend. So do you want to do this? You want to be very well, you either want to do this when there is big candles, when the market's moving, when you think it's going to move, or in options Omega, they've done a lot of back testing that you can put these on a regular basis, so if you've and different ways to do this. But if you look at this strategy, the negative is if this thing doesn't move, you have negative theta. What the positive thing, I think, Troy, wouldn't you agree? What makes these things very attractive is if you look here, we're at 57.78. If you look at the Greeks here, as we go down, you're eventually going to get short deltas, which is good. If we go up, eventually you're going to get long deltas on the way up. But it's like you basically want Evel Knievel. If you go down, right, and you can get beyond the short strike here, this says 57, your short strike in this example is 57.10. So at expiration, if you're below 57.10, you're a hero, and you would make about $800. Now this particular one, this is due Friday, is $22, right? You can do this in SPY also, which is cheaper. On the upside, 58, where are we at? 58.50, the short wing. On the upside, that's where you want it to get. But if you can just even get up in this area or down in this area, so up or down 50, 60 points, you can do well. You want movement, and that's what we're getting here. So I think these type of strategies are pretty popular right now. The thing what I like about it is with the VIX at 24, you don't really have volatility risk, but it's that theta risk you needed to move. So I mean, there's a lot more you could say in there, and there's a lot of and they have a lot of really good back testing with Matt and Troy at Options Omega on this. But I think a couple things. I think strategies that you might be comfortable with, the RIC, maybe credit spreads as you're playing this range here. On the downside, a put credit spread, on the upside, a call credit spread. The nice thing is, Troy, you get so much more room when the volatility is higher. But the thing to remember, again, the good, the bad, and the ugly. The thing you have to remember with credit spreads is the risk reward stinks on most of them, right? Yeah. Especially if you're picking a short strike with maybe a 20 delta or something like that, where it's more out of the money, right? And so credit spreads are a nice tool, right? You could start, if we're down, you could start with a put credit spread. If it goes up, you can add a call credit spread for an iron condor. But the key is you have to have risk management. If it goes against me, how much, if I'm making a credit of $2, am I willing to lose how much? Maybe twice the credit. One other thing I would just bring up, Troy, just for people who to think about, you think about this topic of calendars, right? Two more quick things like calendars. When people think of calendars, Troy, do I have a minute or so here, or do I?
All time you want. Yeah, for sure.
Okay. Awesome. Real quick on calendars, I just want to point this. Here's where people get so jazzed up right now, they can't control themselves with calendars. But it's like, so if I look at a calendar here, this is a calendar, and I sell at the money 57.80. All right, so I sell the at the money's 57.80 and buy 57.80. So, and in this case, let's just say the distance between the long and short is three wide. So you look at this calendar, and we put on the calendar at 57.77, and you have from here to New Jersey to the break-evens, right? You've got 57.80, 58.80, 190 points. Never do I see calendars that have break-even points this wide, right? Yeah. So people say, I like double calendars and single calendars when the vol's going up, and they're 100% correct. If you can get high volatilities and they stay up, you get more room. It's like, yes, you found a way to have your cake and eat it too. But just remember, what happens when the volatilities go down? I want you to just, folks, watch the break-even levels here. This is your profitable area. Watch these tent posts as I do something unkind or not kind to this graph. If I start lowering the volatility, I want you to watch those break-evens. Okay, I'm sorry. If I lower the volatility, now watch those break-evens. You see that, Troy?
Don't hurt that calendar, Dan. Leave that calendar alone, Dan.
I know. So what happens is those break-evens, the wide break-evens start disappearing, and look at the middle of the graph. It starts sinking. So I look at calendars and double calendars in this market, Troy, like musical chairs. As long as the music doesn't stop, it's beautiful. Keep going.
Yeah.
And so just something to think about with that. They are wonderful. And as long as the vols, I mean, they are working fine. Just to keep in mind the last shot, or Troy, do I got time for one more minute?
For sure.
All right. The last thing I want to bring up, folks, I just want to talk about, and I'll just say this in verbiage. When you think of the world of shots, right? And I don't mean drinking shots. I mean, taking speculative with these big candles. Okay, the market's down. Geez, I think it's going to come back. What's a cheap way to play the upside, right? Without getting run over with a steamroller.
Yeah.
The cheapest shot, there's just three. The cheapest shot, so I want you to just visualize this, folks, is your butterfly, right? It's going to be your cheapest shot, best yield. And so, for example, let's just say the stock is at 100. I'm going to buy one 100 call, sell two 110s, and buy one 120. So here's just folks, just a quick guideline on when you're taking shots. Here's a bullish shot. Stock's at 100. The cheapest shot is buy a directional bullish butterfly. Buy one 100 call, sell two 110s, buy one 120. They're going to be cheap. They're not much long delta at all. So they kind of feel painless. If they go against you, okay, you don't go to Starbucks for 2 days, right? Not a big deal. The next shot, if you say, I want a little more oomph, if the market comes back up, I want a little more delta. So I make it worth my while. You take that same butterfly, the 100, 110, 120, which is 10 wide, buy one 100, sell two 110s, buy one 120, widen it a little bit. Make that front part the 195. So buy one 95 call, sell two 110s, and buy one 120. So that first leg of the journey, that part of the butterfly, you widen it out, that'll give a little more delta. It'll be a little more expensive, a little more delta. The most expensive shot will be, hey, instead of the fly, I'm going to take that first part of the fly, right? What is a fly made up of? A vertical debit spread and a credit spread. Remember, buy one 100, sell two 110s, sell one, or buy one 120. Well, vertical is just saying, in this case, I'm going to buy 100 call and sell a 110. That'll give me more delta. It'll be more expensive than the butterfly or the broken wing. But even if we go up a little bit, I'm going to make money. So I think these are all defined risk, cheap shots. And when you get a candle environment like we have, I think these are ones, if you want cheap shots, meaning what's not a cheap shot? Buying a call on a $6,000 vehicle like SPX is going to cost you a mortgage payment. Whereas with these, you can do these shots for a couple $100 in a $6,000 vehicle. So sorry to, as my Irish grandmother would say, sorry to blather, but that's my 2 cents.
No, that's awesome, Dan. I mean, that's exactly right. And I think that's the way people are looking at it right now. I mean, I know, because we automate the trades over at Option Omega and things like that. and there's all season trades. There's trades that you just put on because they just work through time. It's shown. And then there are trades where you're like, I'm pausing this sucker until we figure some stuff out. And so this is a great time. Anytime you get a VIX environment like this is a great time to kind of cycle through some of these tests that you've done and say, hey, what works? Let's add this data set to my great over 20 VIX data set that I've been using that I haven't got to use in a while, that I use twice a year the last 3 or 4 years. Well, suddenly we get a week, where you've got some more data over 20. You can start putting some stuff together. And I think what you just said is great. Like, look at some cheap shots. Look at stuff when vol's at 25, seeing if you can test something cheap and see what happens.
Well, and when you test it, the great thing about a proven back test, and especially if you put it on a bot, right?
Yeah.
A proven back test, it's not going to get freaked out about the tariffs. It's not going to have an emotional breakdown. Yeah. It's going to execute it. And that's what you want. I think that's, we're human beings, and you get fearful.
Yeah.
You can get fearful, especially if you don't have a trading plan in these type of markets. And so to have a plan that's on, like a bot or something, there's a lot of benefit of it, right?
Yeah.
That it executes the job, right? It's not going to get, hey, I got scared of what this tweet. It doesn't care about the tweets.
Yeah, that's exactly right. And I mean, I think that's why people like the idea of automating, because as far as I know, we haven't had any feature requests for the bots to say, is there a way that a post VIX 25 my bot can have an emotional breakdown? No one's asked that.
That's right. That's
so
right.
Who knows? Maybe they will, but we'll figure it out. Anyway, well, guys, thanks so much for being with us this morning. I'm gonna go check on a tow truck. I might be hitchhiking somewhere, but tomorrow. But guys, be safe out there. Dan, thanks so much for being with us.
We'll see you
guys tomorrow.
Thanks.